Hey folks, welcome to VerifiedInvesting.com. My name is Gareth Soloway, Chief Market Strategist here. In today's video, we're going to dive into the chart on gold, silver, platinum, and palladium to find out where these charts are headed. Is price going to continue to rise on gold? Where is resistance? And also, let's look at platinum and palladium because those have not really had major breakouts yet. And I think, again, they're on the verge. All right, let's dive right into the charts here and take a look. What we can see on gold is that there's this parallel channel that goes back to 2024. And what we can see is, again, you hit the high end of it here, it reversed, came back in. We went into this long period of bullish consolidation, right? And then recently, we've obviously had the big turn up to the upside and pushed up and even taken out this zone here, this resistance trend line. So now that we're above resistance, well, where is price going to go? And to do that, we're obviously going to look at the chart. Before we do that, I just want to point out the nuances of technical analysis. And with that, notice we had a close above, and then notice we had a confirming candle right here. And so really, sometimes you'll close above a resistance line, and then the next day it flushes back below. And a lot of retail investors are just left scratching their heads and like, well, why was that not a breakout? And the answer is you need confirmation, the confirmation signal. And that's what we got right here. And notice that once you confirm above this yellow trend line goes from minor support when you're above. Once it confirms, it becomes major. And then look at what happened. We had this day last Thursday where price came down, and immediately as it kissed this range here, this trend line, it went right back up and continued to move up here. And so that really shows you the power of a confirmed breakout versus an immature breakout or essentially a fake out. All right, so now that we're above this level, where is gold going, right? And to do that, what we want to do is we want to look for our next parallel. So this is one of the tricky things when you're in uncharted territory on a stock or a crypto or a commodity. What you have to do is you have to start using parallels. Parallels will still give you upside resistance levels on a chart. Now, it doesn't mean that it's not going to break through that as we saw on gold here, but it at least gives us a goalpost, right? And as a technician, I want to know, where is gold going to find its next issue? Where is it going to struggle potentially? Where is it maybe going to pull back? Where do I need to monitor that if it breaks that, then I know we have another leg up in gold to the upside? All right, so let's go back to the chart and take a look here. And so what we want to do is we can see that we have this beautiful parallel here, but where would be our next parallel? And again, you guys can be doing this at home with me, but what I'm going to be doing here is taking the low from 2024 and connecting it through the low in 2025, right? So again, these lows right here. And what we're going to do is we're going to bring this up to the highest point prior. And what that does is it now gives us a goalpost to look at on gold. And so ultimately what we're looking at now is continued likely. And remember, everything is probability based. So really, really important to understand this, folks. Nothing that I do is in stone, meaning that there's no 100%. There's no 100% trader. If there was, they'd be literally so wealthy. It would be ridiculous. We'd all wonder what the heck's going on, right? The closest you get is like BlackRock, which has it seems like they have every insider information, right? But essentially they can be wrong too, and they are wrong on occasion as well. But the point being, again, is that it's probability based. And so when we look at gold, the obvious scenario now is we've cleared the first hurdle. Your next hurdle is up here, which interestingly enough, what price is this? Look, right around 4,000. And so really, this is how you're going to look at this chart. I'm going to lay it out so simply that we can all follow along, right? And so really what we're going to do is we're going to say, okay, we've broken above this first level here. This now becomes major technical support right here, okay? That means that probability favors a move up into this level right up here, okay? Now, as any trade or any bias or any probability, there's always a probability that it fails, right? That the smaller probable outcome occurs. The way you know if that happens is if you ever reconfirm below essentially 38.20. So right now we're trading at 38.85. If you ever confirm back below 38.20, then the probabilities quickly flip to a corrective move potentially down here, right? Right in this vicinity. Okay, but as long, and I repeat, as long as we hold this zone here, the upside right now, probabilities dictate a move to 4,000 on gold. Once we're there, we need to watch how gold reacts right here to see if can it break and confirm above this line. But you guys see how a good trader, like people will always say like, oh, well, you're saying it could do this and you could do that, right? And it's like, no, that's not really like if you're intelligent, which you guys are. I mean, that's why you guys tune in here. Then what you understand is that there's about a 75% chance we're headed to 4,000. Right? That means 25% chance we break lower. Should we break below 38.20, the odds quickly flip. And as a trader, you need to know that because you need to know if you're long gold, you need to get the heck out. Because if you confirm below 38.20, then all of a sudden you're diving likely back down to like 3,500. And so that's the kicker. The key is always trying to trade with the probabilities, with the high probability outcome, because ultimately, if you can, I mean, if you could be right 75% of the time, you're a multimillionaire. I mean, it may take years depending on how much money you're starting with, but you're going to be a multimillionaire if you can just consistently win 3 out of every 4 trades, 3 out of every 4 trades over and over again. Okay, so again, just wanted to go in that. Let's look at silver. Now, silver's been one of my good calls here that has been with gold, right? I've been bullish on gold generally, although expecting pullbacks along the way. We've honestly had minor pullbacks at best along the way, but the next obviously target on gold is that 4,000 level. On silver, 48 to 50 was my target. That is still my target. We've now achieved the low end of it. Now, you see this trend line up here. This trend line, if we zoom out, is a connection of the high of 1980 right here to the high of 2011. And so that to me is the logical upside big resistance area because it's high pivot connected to high pivot gives us resistance just below 51 bucks. Okay. Now, notice how the high of 1980, look at where we currently are. So this is where by the way, this is how I just so simply got my low end of my target is just by saying, okay, low end is 48, high end is around 50 bucks or a Pierce of 50 right up here. There you have it. All right. So listen, we've now achieved the low end. Do I go long here? The answer is no. If you're not long already, you're already starting to hit the lower zone of resistance. At least for me, I'm not going long. Do I short it? No, I don't short it either. Why? Well, because you're still not at the high end of resistance. So why would I short it at 48 if it could easily go to 50 or almost 51? Now you get that unbelievable surge where it gets straight up into 51 or just below. Yes, at that point for a quick trade, mind you, I will be looking to short silver. Now, not a long-term investment because I still think silver is going up in this cycle. This is a bullish cycle. I think it's still going higher. Last week I did a video. We talked about $62 per ounce on silver. It's not, listen, you'll find people out there that are telling you $500, $100 by the end of the year. I'll use the charts. It's one of the reasons why my upside and downside targets are not always so ridiculous, right? Everyone out there is just like, oh, it's going to here. Bitcoin's going to 1 million by the end of the year. It's like, dude, calm down. Let's take it step by step. Think about it like this. I'm a staircase trader, meaning that I look for, we're here, here's your new next resistance. And so it's one step up. If we break there, then your next resistance is this one. Same thing on the downside. All right, here we're trading at this level. If it breaks one step down, we look at the next support and step and step and step. And what that does is it keeps me very realistic. Again, these people that have these wild, and I don't mean to get off on tangents here, but these people that have these wild outcomes or targets, what it ends up doing is it triggers emotion in a lot of investors. And emotion is your worst enemy when it comes to trading and investing because it makes you basically, let's say in 2021, Bitcoin was at 69,000 and in general, you're like, wow, man, maybe I should take half off the table here, at least protect myself, even if I don't want to get out of all of my Bitcoin, especially when during that period, I was like, guys, it's going down to 20,000, right? Then once it got below 20, I said, maybe 10, never got to 10, fair enough. But ultimately the 69 to 20 was a great call. One of my best in my career, in fact. But one of the things to note here is that emotion makes people then not do the smart thing, the common sense, logical thing, which is protect your profits. And that's where people get into trouble because the emotion takes over, the greed or the fear on the other side of things. All right. In any case, silver, that's the short-term upside is up to 51. We then look for a pullback potentially and then a move to 62. Now, palladium here, this is interesting. Palladium has not even taken out this recent high right here yet at 1335. Now, what I'm thinking here is Palladium could be, and I still think Palladium is going up, but this could be the beginnings of a cup and handle pattern. And so I am still bullish on Palladium for another leg up. If you look at this chart, right? I mean, this chart almost has that same sort of bottoming pattern as well, right? All along here, and then it's even almost like an inverse head and shoulders. It's kind of a weird looking inverse head and shoulders, which is a bullish pattern, but nonetheless, it is a pattern that should denote interest. And ultimately, I do think we will eventually break. Notice where the resistance level is. You had this beautiful, by the way, this was this beautiful downsloping trend line. Notice how you broke above, retraced, broke out to the recent high. Then you pulled back, retraced, and now you're making that cup and handle or, inverse head and shoulder type pattern setup. But the point being is that there's nothing on this chart yet that is bearish. All right. On Palladium. Palladium, again, could be making bullish consolidation, cup and handle. As long as it holds this area around 1,065 or so, then this to me favors the upside, especially considering it has lagged gold and silver now so dramatically, right? I mean, silver, if we look at where silver was trading not that long ago and where it is now, it's had a monstrous run. Palladium is still lagging that, and needless to say, they're all lagging gold, right? I mean, gold has just gone nuts. Now, if you look at platinum, platinum's a little bit more interesting. We've had a breakout on platinum here. So here's one of those classic upsloping trend lines. As long as this holds, the bias is bullish until our next target. The target here is around 1735 or so. That is your upside basis. And if you look at this, the reason why I like this is not only did we break above this level and confirm, but look at the consolidation, right? You had the breakout and then the bullish consolidation, which eventually you would think would yield a move up. But near-term target, the stepping stone, right? We talk about the next step higher around 1735. We get to 1735. We'll then start watching to see if this can break out. And lastly, we'll just talk quickly about copper. Copper was making this beautiful bearish pattern. It has shown strength in recent days here. I'm not yet ready to say, oh, the bearish pattern is over. And the reason I say that is because you're still technically inside of this pattern formation, right? So what we see here, and I'm just trying to get, I want to get my drawing tool here, but you can see that even anything in here, right, this is all still bearish. It did break out of this kind of tighter parallel band, but again, if you look at a bear flag, it's essentially a move down and then something like this, which this still has earmarks of. And so while we're seeing a good recent move in copper playing a little bit of catch up here, it's not out of the range yet that would make me say, okay, now it's bullish, right, at this stage of the game. And again, if we zoom out on the chart on copper, you can see we have a major trend line down here. If it ever tests that, that's going to be very interesting. And then really on the upside too, I mean, we look at this, you can say essentially that you have this beautiful trend right here, which, what is this, guys? Look at this. I mean, is this basically parallel to this line? And so you're trading in this bigger parallel, but within that parallel, we still have kind of a pseudo. Listen, it's definitely not as crystal clear and perfect as it was. But like I said, it's still inside of this down move, which still loosely fits an inside bar consolidation pattern. And so again, this will be interesting to see because, copper, you could make a case both bullish and bearish from a fundamental point of view. The bullish bias would be, oh, the data centers, they need so much copper, blah, 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 blah. The bearish case is the U.S. economy is slowing. The globe is not doing the greatest. As the U.S. slows, the globe will slow, and therefore copper demand goes down. Really, it probably depends on which narrative is getting pushed in the mainstream media, depending on what happens. This is why I look at the charts, is because the charts are my only truth to tell. Always remember this, is that charts and price action in a chart has no bias. It is what it is. Price is where it is. The candle formation, it is what it is. There's no one spinning it, right? It either fits a bear flag or a loose bear flag or it doesn't, right? And so that's really the beautiful nature of why technical analysis is so good for us, is because it takes away any sort of bias that social media or mainstream media or anything else has out there, including us, by the way. We all have our biases, whether we want to admit it or not. We all do. And a chart is simply a chart. And the beauty of that helps us get rid of those biases that can make us make decisions that are not necessarily in the highest probability outcome versus the chart. It is what it is. All right, guys. Thank you so much for tuning in. Thank you, guys. Don't forget, share this with people. If you have friends, family that would benefit from technical analysis or my work here, that's all I ask from you guys. Share it around. help your friends and family out, and help me out. Thanks so much. Take care.